Ashwin, it's good to have you with us. Long time since we connected.
Yes, Ashu, pleasure to talk to you. Always good to talk to you, and it was great being on your panel a couple of weeks back as well.
Thank you so much, Ashwin. It was in fact wonderful to have you, right? And I think from there we're picking it up, and we're having a focused discussion today, right? Honestly, I've been looking forward to this discussion, right? I've had the opportunity of talking to you on many things, right, at a personal level. But I think doing it for an audience, I think, is always more exciting, right? I think the fact that we can be a vehicle where we can help many investors communicate, how they look at companies, their larger views, thesis. I think it's always exciting, right? I think it brings in a certain efficiency in the ecosystem, which is, always very important, right?
Absolutely, no, and also the other side of things, right, which is the entrepreneurs understanding investors well,
Right.
because it makes it easier for them to know where they should be trying to raise
Right.
capital.
And I think we need to
Helping a lot of people.
We need to become a little more. I think scientific and process driven around that, rather than being emotional. I think the emotional cord usually tends to get a little higher. But I think through the session we'll try and cover many aspects, Ashwin, and like I said, right, and this is a session that I'm looking forward to. Before we dive into the session today, Ashwin, I'd love you to take us through your professional journey. You've been out there for a long time as a professional, right? And I think a lot of what you do in your investing is there's a rub off of a lot of experience that you've had, right? So why don't you tell us a little more about it, and then we proceed into the session today.
Yeah, sure. So I perhaps had the most, how do I put it, the most unusual path into venture capital and into investing
Right.
that you'd find going around. I started off my working life as a marine engineer
Right.
with a company called Maersk. I was sailing their oil tankers, and in a very different world, very non-corporate type of
Right.
environments,
Right.
but extremely challenging. And I think I learned my early skills around problem solving over there in very
Right.
difficult circumstances, but also in very in circumstances where you needed to react very quickly,
Right.
right? And that was a great learning for me. And I did that for about 4 years, and then I said, listen, if I want to get back into corporate, I'll have to do it now. Otherwise, I
Right.
sort of got to become a career shippy, so to
Right.
speak.
Yeah.
And
Yeah.
and so I decided to make the switch. And
Right.
then when I left, I said, listen, this is it. I don't think I'll ever use this knowledge that I've gained here ever again, except to
Right.
the extent that it taught me a few things about interacting with people internationally, and
Mhm.
how you can become efficient. So some of the
Right.
softer aspects, right?
Right.
And very interestingly, when I invested out of my first fund, and I'll come to that path later as to how I got there, but when I invested out of my first fund, we looked at a company called Sedimac that
Right.
we were going to invest in the engine space. Of course, for two-wheelers and four-wheelers, that was more of the and diesel generators. That was more
Right.
of their target audience. But I could understand a little bit of what the entrepreneur was talking about only because of my background as a marine engineer, and I'd actually
Right.
been inside some of those ships' engines. Forget about. So
Right.
I'd really felt them. And Sedimac ended up giving us one of our biggest multiple returns out of my last fund.
Wow.
And
Wow.
so, something that I thought was my past life actually came back and helped.
Right.
And so I'm a big believer in what Steve Jobs says: connect the dots, and you never know till it happens. You can only
I
look
agree.
backwards and connect the dots.
Right.
But just taking it up from, so moving out, I came back to India, did my, my B school, did my stint and something that I'd been staying away for a while, which was IT services,
Right.
more in business roles with Wipro. And then I said, listen, I actually put out a startup of my own. We weren't doing too badly. We were getting there, something which was actually fairly high on tech, had a
Right.
good tech partner who was building a product that was being used by online gamers across the
Right.
world in a very SaaS-ish model when SaaS was not even a term that
Right.
we were using. And then I had this opportunity that somebody came to me with, which said, why don't you set up a fund? We're thinking of setting up this fund, which we're going to create from NASCOM.
Right.
And I said, this sounds interesting. And then I sort of weighed the option of continuing with my startup
Right.
and building that out, back in the day, and creating a fund. And somewhere the concept of a fund appealed to me a lot,
Right.
being part of an ecosystem. And so I got involved with NASCOM to do that, let go of my startup,
Right.
and then ended up actually creating something. I mean, working to create an innovation ecosystem out of NASSCOM, but the flagship program was a fund that we set up, and we call that the India Innovation Fund.
Right.
Idea being that we try and promote companies or startups that are creating IP out of India that could be globally competitive.
Interesting.
And we actually ended up setting up India's first deep tech fund
Right.
Back in 2009, when deep tech was not even a word that we were familiar with.
Right.
And obviously, it's become a lot more commonplace these days.
Right.
But we used to, try to figure out what to call it, whether it's IP generating startups and so on and so forth.
Right.
Had some difficulty communicating it out.
Right.
And so whoever came in with the word deep tech, I'm thanks to them,
Thankful.
it makes life easier for us.
Right.
So we set that up, got that going. We had a bunch of Indian corporates, the Indian government participating, but a ton of private investors as well in that fund. Ended up investing from 2010 to about end of 2016,
Right.
and made multiple investments in both the IT or tech sector as well as the healthcare sector. Companies like Mitra Biotech, Contour Medical, are a couple of them in the healthcare side of things. Sedimac, as I mentioned, was a tech startup, and a few others in that space. And in 2017 beginning, we actually sold our portfolio to a Hong Kong-based fund called TR Capital, which came in and were looking to enter India and found our IP thesis or IP-led investment interesting, and therefore brought out our portfolio. And then post that, I got together with a bunch of others who had created, CIIE, which is the incubator at IIM Ahmedabad. And they'd already set up a fund in the clean tech space called Infuse Ventures. And we're thinking of the next thing. And I was also thinking about the next thing as well.
Right.
And I sort of managed to convince them that, listen, we need to do a deep tech fund. This is where the future is.
Right.
And, fortunately, they were aligned to that thought process.
Mm-hmm.
And so Bharat Innovation Fund, which we set up, is pretty much based on the philosophy of promoting early stage deep tech startups out of India and supporting those guys. And we're well on the path with that, and happy to talk about what we've been doing out of there as we go ahead with this conversation.
Ashwin, thank you so much for that lovely introduction. Right, I think, and I kind of agree with what you said. Right, I think in hindsight, it's all 2020, and it all comes together. Right, and I think whatever we do comes, we're doing it for a certain reason. I think I'm being a little philosophical, but I think it comes together. Ashwin, there's some great work that you've been doing at Bharat Innovation Fund, right? I have had the opportunity of knowing you since the time you were setting it up, right? Since the time it was coming together. What is the fund thesis, right? And I understand there are two separate funds that you're doing within that, right? One is a deep tech focused fund, the other is an impact focused fund, right? So if you could take us through the thesis of both of them, that'll be helpful.
Yeah. I think our broad idea is how do you create impact? And we found there are two ways that we thought we could create impact in slightly differentiated spaces. One is, of course, we think about India as a garage of innovation. And as I mentioned to you earlier, deep tech, while we said we'll try and promote the deep tech ecosystem in the country, what we realized is that strategically this made a lot of sense because one, there aren't too many deep tech focused funds going around in India. A couple of them have emerged in the last few years, but there haven't been enough to support early stage, cutting edge tech startups. And it takes a different type of evaluation to be able to invest in those. And we thought that's one that we could perhaps address. And most of these startups that we invest in out of that fund require to address global markets. We invest in, address, but have customers in global markets or look to get customers there. We invest typically pre-series A to series B rounds. But the sweet spot is pre-series A and series A rounds that we invest in out of that fund. The second fund we realized is there's another way we can create impact, which is how do we leverage some of the technologies that have been developed and specifically the India stack and all the good work that has been happening around Aadhaar and the India stack, and can some of those technologies be developed or used for startups that are actually trying to deliver services and products that will uplift the lives of people at a lower economic section of
Right.
society, be it your Ola driver or Uber
Sure.
driver, be it other gig workers, be it your maid and cook and so on. Uh, could there be efficiencies that are brought in through technology interventions to
Okay.
improve their education, to improve their health, their accessibility of financial services, and so on
Right.
and so forth? And so that's a fund that we set up with a partner that joined us, who was actually the product officer at the Aadhaar project,
Very interesting. Right.
and one of the architects of the India stack, right?
Right.
So Sanjay Jain, joined us, and so we are now focused at two ends. One, the high innovation side of things, global markets, and then the second, more tech enablement for lower economic sections of the society,
Right.
and very India focused type of markets.
Very interesting. Very interesting. Ashwin, through this conversation, we're going to focus more on the deep tech side of things, right? I think that's a very interesting area, and I think post 2020, that's there is just so much adoption, and I understand where you're coming from, right? Having a global possibility is always very exciting, right? And I think we need to, as a country, think of sports, which I think we've kind of stayed away from, right? I think we've always been largely looking at companies which have been inward market servicing, right? Uh, and I think from a deep tech standpoint, while that was a market which is important, I think the India market also kind of matured in a post COVID COVID environment, right? And I think we'll discuss some of those bits through the course of our conversation, right? Uh, Ashwin, one thing that I wanted to understand, right, is so you highlighted, the kind of typically the stage that you get in, right? What are the check sizes that you kind of prefer, right? And are there certain, I think aberration is not the right word, but are there certain variances when you're looking at a certain company from an investment standpoint on the deep tech fund side of things, right? Could you enter at a seed level as well, right? If say it's an exceptionally interesting technology, right? Or would you handhold them to a certain point before you make an investment? I mean, tell me certain nuances that are there when you engage with them.
Sure. Sure. So let me address the ticket size question first, right?
Sure.
And we typically start at around 500K,
Okay.
go all the way up to a 3 mil first check,
Right.
and then we hold back significant amounts of
Sure.
reserves for each of the portfolio companies to
Right.
participate in follow-on rounds in a big way, right? And we've done that already.
Hmm.
Three of our early investments have already raised significant follow-ons.
Right.
A fourth one is where we are also putting in money with an existing investor, right?
Right.
So our strategy here is, of course, our sweet spot is a little bit more around the 2 million to 3 million mark,
Okay.
right? So the seed opportunities that you are talking about,
Right.
where we see a lot of promise, we may go in with a smaller check, more in the range of that 500K,
Right.
or more towards 500K, sub 1 mil type of a range, and then support it or back it as it goes through its evolution with
Right.
further amounts of capital.
Hmm.
But interestingly, if you've looked around the ecosystem, you're seeing a ton of venture capital funds which are coming early and setting up accelerator programs,
Right.
right? I can think of at least three or four well-known
Right.
funds, but there are many more who are doing it now, so that they can catch startups fairly early,
Right.
and then take them through the path of evolving and scaling
Right.
up. And from a return standpoint, that sometimes works out a lot better.
Right.
And we, in fact, have the, let's say, the fortune of
Right.
having already that vehicle within our umbrella
Right.
that we can leverage, which is CI, the incubator. It's been around for about a decade, a little bit more
Right.
than that, and does a lot of seed investing.
Right.
So opportunities that would come to the Bharat Innovation Fund,
Right.
if we see that those opportunities are a little bit early for us, we
Right.
typically tend to refer them to CI,
Right.
and the investing team over there looks at that with a very different lens.
Right.
And if they think the opportunity is right, they go ahead and invest, right? So
Right.
there are a few Chinese walls that we've set up as well
Right.
to enable this process. But I think what has happened over the last few years, is that CIE as an incubator and its seed investment arm has also aligned itself well with the whole deep tech thought
Right.
process, and are actually looking for startups emerging in the deep tech ecosystem
Right.
that they can invest in.
Right.
And so that becomes some where we send some of our seed opportunities, but B, we also look at opportunities that they've invested in that emerge out, and so it becomes a little bit of a pipeline,
Right.
which is proprietary in nature, that we go and
Right.
try and catch early because we have an early look at some of their investments.
Interesting, interesting. Ashwin, and I'd love to discuss the portfolio, right? I think there are some very interesting businesses that you have, right? But also, I'm gonna pick up a point from the earlier question that I had. You answered, right? You've also been very active across many education institutions, right? And I think detect is something which you kind of picked up in almost a lab level, right? I think when there was a team which was kind of experimenting, right, literally in the lab, right, and you picked it up from there and you kind of nurtured it, and eventually went on to invest in that company, right? There is a certain piece that you've also built on those lines, right? So while of course the CII that exists, right, I think you've been looking at a lot of IP which is being built across educational institutions, right, in the country, right, and that's also a line of or a pipeline that you kind of have built for the fund, right? So tell me a little more about the portfolio. Tell me a little more about that side of the engagement, right, which is more mentor-like, which is more you know not say as structured, right? It's more on and off in that sense, but very important. Tell us a little more about
Yeah.
that.
Yeah, so let me, you said you spoke about academic institutions
Sure.
and startups emerging from there. I think from our
Right.
last fund, we must have invested in at least three startups from the IIT Bombay ecosystem.
Right.
All of them had very different outcomes, three very different outcomes, to be
Right.
honest. We had a few others from the incubators at Pune and so on and so forth.
Right.
Out of this fund, yes, you're right. Detect is one at least that we've looked at, which has emerged from IIT Madras
Right.
and the labs over there, the incubators over there.
Right.
What we are seeing broadly is that there's been a maturing of tech incubator ecosystem
Right.
across multiple educational institutions in India as well.
Right.
Right? And so when we came across Detect, they were perhaps a little bit beyond lab. They were doing some early prototyping work
Right.
with one large company in the oil and gas
Right.
space, which almost was a co-development partner, if you can call it. Very important early, somebody who put a little bit of faith in them when their product was still under development. But very important to have that ability to test and the domain knowledge that came from that.
Right.
And when we looked at them, they were perhaps, I don't think they had any revenues, to be honest.
Right.
They had product under development.
Right.
But it was a fantastic team of, five very bright people,
Right.
professor, in fact, and four of his students who
Right.
got together. And we just thought, as we heard their story, that here is something that is, going to end up being world class.
Right.
And it was a bigger leap of faith in investing, but it just sounded so right when
Right.
we heard about their uniqueness and how they were, really going to disrupt the ecosystem when it came to the oil and gas industry.
Right.
Um, we weren't ready as a fund then. We were still setting up our fund.
Right.
So we sort of had it invested in from CIE, and then eventually the fund came in and came onto the cap table. But we certainly have walked the journey with them for the last, I think, 3 or 4 years now, to their very recent Series B raise that just happened or got announced a
Right.
couple of weeks back.
Right.
And it's also to be noted that it's not just they started off with a single product which sounded exciting, but they've actually now morphed into having 3 or 4 products that addresses that
Right.
particular segment,
Right.
and perhaps is even extendable to other industries beyond oil and gas, but similar ones in the process
Right.
industry space. And it's been interesting to watch that journey and how they've matured from, as you pointed out, being this sort of product that has been built with a lot of help from interns, and somehow managing to get people who are very intelligent but at a very low cost to
Right.
help them in the product development. And then now I think they're 120 employee organization and
Right.
recruiting globally and so on and so forth. Global customers now just signed a very large contract with one of the biggest in the industry that they cater to globally.
Right. Right.
So it's very it's not just heartening to note that you
Right.
have these companies that are just emerging from nowhere almost,
Right.
a bunch of guys from who met in college coming
Right.
together, putting a startup, but it's world class now in a very
Right.
short span of time.
And I think it's also difficult to believe. I mean, I've no had the opportunity of knowing the founder, at many occasions, right? And I think a 30-year-old And what they've achieved, I think, is absolutely phenomenal, right? Ashwin, what are some of the other companies that you've invested in, right? What is the portfolio like right now at Bharat Innovation
Sure. So we made 7 investments out of the Bharat Innovation Fund,
Fund?
7 more I think out of the Inclusion Fund.
Right,
So we're sitting on a portfolio of 14 companies.
right,
But let me talk about the 7 that are in the Innovation Fund,
mm-hmm.
right? And we've got a fairly wide range. We're sector agnostic, with deep
Good,
tech being our common sort of theme.
right,
We realize that we need to be agnostic on the sectors, and wherever there's something cutting edge, we need to back
right,
it. So we've got anything from an entropic technologies,
right,
which uses artificial intelligence and applies that to brainwave mapping
right,
and facial coding, to deliver to you
right,
what a customer's, or to their clients,
right.
what a customer's emotional responses to any of your digital properties are. So if you
Oh
have a
wow,
website, if you have
right,
a mobile app, you have a
right,
chatbot, you have some packaging which is not just digital but offline as
right,
well. As a customer looks at that property of yours or that asset of yours, what are their emotional responses? What is their level of attentiveness? What
right,
is the level of arousal? These are all parameters that they have been able to crack using a very sophisticated AI engine.
very interesting.
And they're now taking this to other use cases
Right,
as well as adding modalities like voice and so on.
right,
So Entropic has been, one of them. They've got global customers now. They've scaled
right,
up, raised a follow-on round of funding. So that's one. The second that we've invested in, Ditech, we spoke about. We've
right,
actually invested in a third company called PlayShifu,
right,
which is a very interesting company which applies AR and VR to a physical toy
right,
and really enhances the quality or the experience that a child has with that toy, right?
right,
And these are toys that are used by children between the ages of 2 to 12.
right,
So you enhance the child's experience using
right,
VR. You've also provided some amount of STEM education
right,
through those toys, right? So
right,
it's an edutainment company is the way I think about this,
right,
in what we call the phygital world, right? So digital plus physical.
right,
So it's a mix of a lot of abbreviations, but essentially they have, for example, a globe product which
right,
somebody can take an iPad on, zoom onto the some part of the globe,
right,
and then let's say, for example, Nigeria comes up, and
right.
all this information gets thrown up, which is
Beautiful.
related to Nigeria
Right.
population, animals there, all of
Very
that
interesting.
is interesting to children, right?
Right.
So they're doing a fantastic job of selling a lot in the US markets currently.
Right.
Of course, they're also available in India,
Right.
but doing extremely well on that, and coming out with a multiple range of SKUs on the toy
Right.
front. We've also invested very interestingly in a company in the immuno-oncology space,
Right.
so a biotech company.
Right.
And the entrepreneur, Kavita, over there had built and sold off a company in the biosimilar space prior to setting this up.
Right.
And what they are doing is they've got some proprietary antibody platforms.
Mm-hmm.
And antibody is a fairly familiar word these days, given COVID and
Right.
what's been happening.
Right.
And so they're able to take antibodies. They're developing one particular one that they have selected as a molecule to try and get a drug or a molecule out
Okay.
which will treat prostate cancer.
Wow.
And they're currently in the drug development process.
Right.
So value creation here will be not one where you keep seeing, as we as investors will keep seeing numbers
Right.
going up. It
Right.
will be how well the product is developing and
Right.
addressing, going through the preclinical trial phase and
Right.
then into clinical
Right.
trials. So that's an interesting company which has got its labs in Bangalore that we've invested in.
Right.
And then a couple of others, I won't go into details, but we have a company which is in the digital lending space, Credit Vidya, which uses AI
Right.
to be able to underwrite loans for a
Right.
segment of society that we call near to credit.
Right.
People who should be lent to, but banks don't have the right information to be
Right.
able to lend to them, banks or
Right.
NBFCs. And through their AI engine, they're enabling lending to a set of people who earlier could not have access to these loans,
Right.
but are fairly creditworthy when it comes to it.
Right.
We've also invested in a company in the using ML in the cybersecurity space, a company
Right.
called Fire Compass.
Right.
So that broadly covers the look of our portfolio. So you've got a taste of
I
how
have. Yeah.
diverse this portfolio is,
You know,
and
a- and Ashwin, what I wonder about is that everything that you've invested in, and honestly, I think this is essentially mostly enterprise, right? And if not enterprise, I think while you're saying all of this, in my mind, what I'm kind of wondering about is these are not very transparent ecosystems that you're investing in, right? I mean, there are many decision makers, right? And when it comes to say adoption of a lot of these things, right? And I can only imagine the kind of challenges that you go through when you're investing in these companies, because not a lot of those variables are actually very visible, right? From having an intent to a transaction is a fairly long cycle, right? What I mean, give me a sense of that, right? I mean, and how much time does it take you from, say, being, you know, seeing a seeing a startup to, and, there could be, with all the experience that you now have, right, across many industries that you've operated in, right? There could be a certain sense of excitement saying that, this looks possible, right? But how important does the entire transactional process, become, right, in terms of the adoption of it, right? It's a very difficult one, right? Why don't you? I mean, I'd love to have your comments on that one.
Sure, sure. No, I mean, let me start by I think you may have heard of a very famous ice hockey player called Wayne Gretzky, right? And he is perhaps the, I don't know, the Michael Jordan or the Lionel Messi or Maradona of ice hockey, right?
Right,
Or the Sachin Tendulkar if you're closer to cricket.
right,
And somebody once asked him why you're so successful and
right,
what made you so successful. And he said, listen, I skate to where the puck is going to be, not to where it is.
right.
And I, just love that as a quote because it's
Right,
so applicable to investors such as ours and hopefully to, let's say, the futuristic entrepreneurs
right,
or entrepreneurs who are trying to address something
right,
new and cutting edge. And why it reflects our philosophy is we need to figure out what is going to be rather than what is today as we
right,
think about making an investment, which
right,
means you're right. It's transparency is limited, but
right.
at the same time, some of the customers you're talking to are still figuring out whether they want to adopt a
Absolutely,
product that these guys are creating, these startups are
absolutely.
creating.
Yeah.
And so a lot of it really boils down to what is our conviction that this is the direction in which adoption will head or a customer segment will head,
Right,
right? And I think that's going to become one of the key points in terms of our diligence, or it
right,
has become.
right,
And you're right. I mean, so we do go through a fairly exhaustive diligence
right,
process, which takes its own time.
right,
And simply because we are also not addressing or very focused in our sectors, we are fairly
right,
agnostic. At
right.
the same time, we try to stay ahead of the curve a little bit by creating a thesis
Mm-hmm.
upfront on certain
Right,
sectors
right,
or certain areas. And so we stay abreast with what's happening, especially in emerging technologies.
right,
And then if you look at it, we have, I mean, you're right in saying many of our startups are B2B. We just have PlayShift, which is our
right,
B2C type of investment. But we also have four investments which have got a significant component of AI and ML,
right,
which is there. And we really believe that uh, multiple use cases that emerge, which use fundamentally some amount
right,
of artificial intelligence or machine learning,
right,
are going to, I mean, there are going to be a ton of these startups that emerge
right,
and we just scratch the surface. So we're perpetually looking for where complex problems that are emerging are being solved through the application of AI and ML, and which
right.
could not have been solved earlier
Mm-hmm.
as a result of that, right? And so to do all of this, I mean, yes, we do interact very closely with a lot of corporates who
Stakeholders.
would be early
Right,
customers. But
right,
let me tell you, I mean, from an India B2B market, the Indian enterprise market is still, I mean, they do a lot of early adoption, but it's
right,
not yet a scale market. It takes time to sell to them. It's a
right,
great test market as things stand.
right,
So Indian products tested with marquee customers, enterprise customers in India,
right,
but then also taken to global customers where adoption levels are higher,
right,
where prices are higher, is what will help these startups really scale faster.
right,
And so the strategy that we like today,
right,
given the state of the Indian and global markets, is
right.
India test market, then take it outside to global enterprises and use that to scale.
Very interesting. I have a bunch of questions on that one, Ashwin, but I'm gonna limit myself, right? I think possibly that's something that I'm gonna reserve for next interaction, right?
Sure.
But Ashwin, when you say that, right? I mean that naturally brings me to the 2020 scenario, right? Um, so on one side you have the bureaucracy that you have to deal with, right? Because typically an Indian ecosystem is very different, right? In an enterprise environment, there are very few who actually stick their neck out and say that, listen, this is something that we want to adopt, right? Second, I think even at a policy level, I think there's always this lack of visibility which is there, right? And thus people don't want to get stuck on the wrong foot, right? And thus, of course, this entire delay in the decision making. So while the leadership could be very excited about it, right? There's this perpetual delay which comes to enterprise, right? And I kind of understand where you are coming from, where you're saying that, listen, India is a good test market, but we're looking at opportunities abroad, right? How do you see 2020 as an event, right? Of what we kind of discussed was very right and I think prevalent in say a 2019 kind of a situation, right? 2020 has just changed it for us in a very different way, right? I've been speaking with many people. I've been speaking with chief digital officers, chief information officers, a lot of service providers, right? And who actually been coming and saying that, listen, earlier it used to be a chase game, and it just sort of changed. Our role has become very different. Our approach has become very different. In fact, we are getting calls from our customers where they're saying, listen, come in and deploy it ASAP, right? And the decision making process has shrunk, right? So, do you think India is going to be a very different kind of a market in a post 2020 kind of environment, right? And we'll see a lot of adoption of many technologies, for example, like the ones you've invested in, you're going to invest in future, right? And enterprises are now going to be opening up to a lot of adoption and are would be willing to take that risk, right? Which wasn't the case early on.
Absolutely. I think a lot of things are going to change, right?
Right.
And significantly, not just in Indian markets, but global markets
Right.
as well. But even in India, I think digital transformation has been a buzzword. I
Right.
think there's been a significant tailwind
Correct.
that has that we are going to see, and we are already seeing. I've been speaking to a few enterprises. I know people, and let's be fair to them, right?
Correct.
A lot of these CIOs slash CTOs have been wanting to adopt technology,
Right.
have been at the forefront of trying to understand what could help them. And I think what COVID and the pandemic has done has almost helped them push their agenda
Right.
quicker than they would have been able to earlier. I
Right.
remember speaking to one of our partners in the enterprise space, fairly large group of companies, and
Right.
the chief strategy officer there, and he was talking about pretty much just this whole work from home thing, right?
Right.
Given they're a very traditional
Right.
company, and how they tried to push this to their management at least 2 or 3 times far before the pandemic, or a year, couple of years before, and there was always a pushback that said, listen,
Right.
this is not going to be done. And
Right.
the minute they were forced into that situation where they could actually demonstrate that, listen, this is working and this
Right.
is actually more efficient in a lot of ways,
Right.
obviously you have a case that can get built up. And he was very confident that post pandemic, when this is taken, there's going to be more of a permanence
Right.
that will come here, right? So that leads me to my next part of the response,
Right.
right? How many of these changes are permanent, how many are temporary, and how many of them
Right.
are semi-permanent, where you'll fall back into old habits,
Right.
not intentionally, right? And I think we are still trying to gauge that to see what is the level of permanence, and this will be different for different use cases,
Right.
right? Uh, Video conferencing, I think, will, for example, I think that's not going to go away, right? You may have a reduction.
Right.
Teleconsulting in healthcare, for example, these are things that will not go away. I
Right.
think they will reduce in the amount or the volumes
Right.
once the pandemic is gone. But then you're also going to see some things which are a little bit more temporary and not
Right.
permanent.
Right.
But broadly, I do think Indian enterprises will adopt more technologies. They will be forced to adopt more technologies.
Right.
My worry is, are they going to be forced sufficiently for the Indian market to become large enough as a scale for
Right.
startups to say, I will only address India with cutting edge technologies? And that's the first part. The second part is when you have something new,
Right.
adoption, early adopters, it requires a different mindset, right? And
Right.
you spoke about bureaucracy. When
Right.
you have multiple decision makers, it's
Right.
always hard to get something new across the line,
Right.
because there are always going to be some people who say, listen, this is, has anybody tried it before?
Right.
Why should we be the guys who are the guinea pigs here?
Yeah, I
Right?
know that's very typical India.
Yeah, exactly. So I think some of that will play out over time, but
Right.
certainly, taking a positive sort of note on this and an optimistic view,
Right.
I do think significant changes are happening and
Right.
will continue to happen,
Right.
hopefully sufficiently. And that is where I'm still a little bit of a skeptic
Right.
as to how long it will take for
Right.
it to become, sufficient for Indian startups to now say, listen, this is this big market. Let's not even look,
Right.
to the other side of the Arabian Sea or the Bay of Bengal. Let's just, sell in
Interesting.
India.
Interesting. Ashwin, tell me this, right? So, I mean, a very related question, right? I'm sure there were certain areas which were no go, right? Say in a 2019 kind of an environment, right? Where everything was hunky dory and, we were operating the way we were. And come 2020 and, things have changed, right? Which are some of those sectors that you always thought were like a no go? This is not something that we're doing, right? And all of a sudden they've become like, listen, let's go back and relook, right? Maybe it's become more relevant, right? There could be a possibility that trends will shape up as we go along, right? But these are things that have kind of reappeared on your radar, right? What are some of those, say, opportunity sectors that you think are? I think sectors are going to be too macro, but I think some of those opportunities, right, that you think are going to become. And I know it's a tricky one, and I'd leave it to you to answer that, right, without, of course, giving out too many specific pointers. But what are some of those things that have reappeared on your radar, right? That
Sure.
this is which has become exciting, right? We are
Sure.
looking at.
No, I think many of them have already been on our radar, and we are
Sure.
seeing that there's an increase
Right.
intensity with which we are looking at them. I mean, healthcare is a classic example of that, right?
Right.
We've always been interested in healthcare. We've always thought there's a future, but
Right.
I think now it just seems to be something that is going to really
Right.
be, the way to go. And so,
Right.
looking very closely at
Sure.
opportunities there. The one sector which I had perhaps given up on a little bit prior to the pandemic is the education sector.
Right.
Investors have not had a happy journey in the past.
Correct.
Look at what has happened
Right.
in the last 3 or 4 years in the
Right.
sector, and some of it has been, while some of it might have happened before the pandemic, I
Right.
think a lot of it has happened in terms of online delivery of education and so
Right.
on and so forth
Right.
because of pandemic. So we are closely looking at multiple opportunities
Right.
in education and
Right.
opportunity spaces that still exist in an otherwise crowded market.
Right.
The second space, which we were a little bit reluctant to get into, and we did actually invest, is the whole biotech space, right,
Mhm.
within healthcare itself. Reluctant because what is the availability of capital, additional follow on capital in
Right.
India? You have to go to the US, you have to raise bigger rounds over there.
Right.
It's just a harder piece.
Sure.
But I do think that therapeutics and biotech have, sort of gained a lot of prominence as a result of the pandemic.
Right.
There's also been an increased focus in India. I think brand India has improved on the life sciences front
Right.
because of some of the things that have happened
Right.
in terms of some of our companies in the pharma space itself
Right.
having come into prominence.
Right.
And as a result of all of that, I think there's going to be more interesting plays that are going to emerge in various spaces in biotech as well. But if you were to talk about the one where I've changed my mind, it's
Right.
clearly education and what is happening on that front.
I think education has kind of amazed everybody, right? I think who's been out there. Ashwin, the other question is that and when you are investing and when you're especially, we always talk about unit economics. We always talk about transactions, right? Now, essentially, what happened when you're looking at enterprise model, right? I'm particularly highlighting towards enterprise more, right? Because I think you're in the best position to possibly answer that, right? Is that there used to be and this is a pre-COVID environment, right? Where in an environment, essentially companies had or startups which are sort of say creating solutions for enterprise had an abnormal profit zone, right? Because this was not necessarily say commoditized, right? And there were fewer possibly who were offering a similar solution, right? Discovery again was a big problem because it wasn't as, say, for example, aggressive as it is today, right? So do you think as the market sort of say there's a digital transformation, we go through this phase of digital transformation, right, where enterprises are going to adopt to everything technology, right? Do you think many startups who are say competing within the same space will land up operating in a commoditized environment, right? Because at the end of the day, while a lot of them are trying to help organizations build efficiency, they are a cost center, right? If you look at it that way, right? They're not necessarily ones that are immediately contributing to revenue. I mean, the overall play could be that, but they're essentially a cost center, right? So, do you think from the overall ARPU standpoint, I think this is a zone which will get commoditized at a certain point of time. The arbitrage that existed, the abnormal profit zones that existed, will kind of shrink. What are your thoughts about that?
Yeah, I'm not sure if I agree that there has been or we have hit an abnormal profit zone as a result of the pandemic, right?
Sure.
I don't think so. I do think that at least on the enterprise side of things,
Mhm.
there has been digital adoption, but I think this was long overdue. With a
Okay.
lot of enterprises, they're going to continue to see the need to do it. They will, the ones that have adopted quickly
Right.
will become a reference point for other customers to say,
Right.
we need to catch up. And so this is going to continue with
Right.
a little bit of a domino effect, is what I
Sure.
see.
Right.
And so I don't think we're in the era of abnormal profit zones as far as digital adoption by enterprises are concerned as a
Right.
result of COVID.
Right.
But like I said earlier, we do see a pullback in some areas in terms of the extent of adoption.
Right.
And those will be typically, I would imagine, in the B2B2C type of
Right.
environments where, a customer who is servicing their customer
Right.
are going to see lower incidences of, let's say, using technology
Right.
going ahead. They will not see the same level. I mean, the
Right.
example that comes to mind is hospitals and their
Right.
interaction with their patients
Right.
has reached an abnormal level because there's no other way they could have done it easily.
Mm-hmm.
But I think as things open up and people are back on roads and going back into hospitals, it's going to come down a bit. Certainly
Sure.
not to the old normal. A new normal
Right.
will get created,
Right.
but may not be the level now. But I don't think otherwise. I do think that there is at least a level of permanence that is emerging in the adoption of digital technology.
Right.
Will the rate of adoption remain the same? I imagine not. Sometimes you do things because you're forced to do them,
Right.
and when that pressure is off, we all tend to take it easy, right?
I think.
And I think that goes for our enterprises as well. But I'm hoping, and we'll have to see how it plays out, but I'm hoping that the taste of success of
Right.
having adopted digital transformation solutions or digital
Right.
solutions
Right.
and the success that it has shown will provide power to the decision makers or direction to the decision makers to say, listen, this is makes sense for us and we should continue on this path.
Right.
I don't
Right.
know if that answers your question, but
No, it does. It does. In fact, it does it in a different way, right? And I think it does it in a very different way. And I think that's a very interesting point that you highlighted, right? That I think possibly the models that will emerge will essentially be a coexistence, right? And I think that rationalization has to be done right now when you're possibly investing in some of those companies, right? Uh, I think that actually sort of brings me to my next question, Ashwin, right? Which is velocity of funding, right? And I think this is something that we've spoken about. And I think when you look at the consumer landscape, right, there is massive amount of money which is being poured into the Indian startup ecosystem. Uh, I think it's unreal to a certain extent, right? I think it looks like a scheme where you become rich overnight, right? And I'm sure that's not the case, right? There is a certain logic behind it, right? I think everybody's essentially banking on the possibility that there's a huge population which is going to now be consuming in a digital environment, right? Uh, but that just makes it so much more difficult, right? For say an investor, right, who are operating in the same zone, right? What do you think about it, right? Given that like we discussed, right, there's going to be a huge tracing back which is going to happen, right? The markets won't. I mean, this is an aberration, right? This will not exist forever. What are your thoughts about it, right? I mean, is the exuberance a little too high? I mean, I don't know. I mean, I'm just trying to sort of, configure my question around, this bull run of sorts, right? Do you think it's justified? The valuations are justified? The pouring of capital is justified? Or do you think we need to sort of, there needs to be a certain sensibility that needs to kick in, right? And I think
yeah,
this exuberance needs to taper down, right? Before we get into a crash and burn play. And then
yeah.
there's a very different kind of complexity that emerges out of it, right? What are your thoughts about that?
Sure. I think you used a term which is very applicable to the public markets, bull run. And so a lot of people are saying this about the public markets as well, right?
Right,
And I think the same thing equivalent to the startup world and investments in startups.
right.
My sense is there are cycles.
Hmm.
And I've stopped thinking about it as a bubble and a bust.
Right,
But I've been thinking about it in terms of cycles, and
right,
cycles will happen.
right.
And the question that we need to ask ourselves is, where's the overall trend going?
Hmm.
I've seen the startup ecosystem for now more than a decade,
Right,
and it hasn't looked anywhere as exciting as it has now in terms of
right,
the quality of the startup promoters, the
right.
entrepreneurs, the type of solutions they're building. I
Sure.
mean, every second day could be a very interesting one with something new that you come across as a startup,
Totally.
right? And these guys are solving problems that are extremely complex. I think you add that all together, my overall view is that things are definitely on an uptrend as far as the quality of our startups and their solutions are concerned.
Right.
Does that therefore merit capital? Yes, it does. There's been a dearth of capital in India,
Right.
and a lot of people have been saying that there's too much capital chasing too few deals for ever
Right.
so long, right?
Right.
But if you really look at it, now you have enough deals, and is there sufficient capital that is available to fund these deals?
Right.
And again, when you think about the best deals or the high quality deals, you're going to be filtering out a lot of noise and then just going after a few.
Right.
The challenge with India is that what has been lacking so far in terms of availability of capital is capital to experiment.
Right.
And I've heard a couple of unicorn founders talk about this a lot,
Right.
which is listen, we raised a ton of capital, perhaps much more than we needed, but
Right.
it gave us the flexibility to be able to try something very quickly. And
Right.
if it didn't work, we still had the capital available to go and try the other thing without going too far from it. But
Right.
that ability to experiment quickly, fail, and then do something again is
Right.
confidence that you'll only have if you have enough capital.
Right.
I think that's extremely important for the startup world because you'll never always get it right the first time.
Right.
And therefore, I think the amount of capital going into startups is to a certain extent
Right.
justified. I
Right.
think there will be, like I said, the down part of these cycles that will happen.
Right.
And as a savvy investor, you need to know when you get in, when you get out, and that's that's the hardest part of, let's
Right.
say, what we do. But
Right.
there are also a bunch of people who are not very well informed in the investment world who are now coming in and, not just investing in stock markets, as you must be hearing, the retail
Right.
investor side of
Right.
things, but even on the startup side of things, you have fairly, less informed
Right.
investors taking calls, and that's added to the liquidity or amount of capital that is going into startups.
Right.
I'm a little bit more worried about them because very often, especially when it's a lot of angel investments,
Right.
questions around how you hold up corporate governance, how you make sure that things are progressing well come up. And I don't know if angel investors who typically have a core business that they're running
Right.
have the time and the energy to be able to dedicate to really tracking and following their startups,
Right.
or have they said, listen, we'll invest and then we'll just watch and hope it does well.
Yeah.
And I think they may be at the guys in the line of fire when things start going down a little bit as far
Right.
as the cycle is concerned. And I think
Right.
as institutional investors, we need to just learn how to manage those cycles well
Right.
and ensure that we are, de-risking as far as possible.
Right.
But that's the nature of the startup world. I mean, it's not for the faint-hearted. You need to have. I mean, we on our website we put it out there. We back bold entrepreneurs,
Right.
but investors need to be bold as well, right? Not foolishly so, but we
Right.
need to be bold and take some, risky bets, and hopefully we're doing that.
Right.
But just to sort of round off my answer, I think you're right. There is a certain element of overheating,
Right.
but I do also think that we were due for more capital
Right.
as a startup
Right.
ecosystem. We merit more capital. What is too much? What is not just not enough? It's hard to make those distinctions
But
sometimes.
but Ashwin, when I start looking at things, right, it's essentially, you know, so the deals. There is a much larger set of investors who are essentially chasing the same deals, right? It's not as if the base is kind of. I mean, of course, the base is expanded, no doubt about it, right? But it's. I mean, if you when you start looking at say anything which is beyond say a seed or a pre-series A, it's essentially just the visible players and visible investors, right? That is not expanding, right? What are your thoughts about that one?
No, I do think that is expanding, right? I do
Okay.
think to some extent, may not be to the extent that funding is happening.
Right.
There
At
may
the
be a
bottom.
disproportionate
Right.
sort of scale up,
Sure.
but I do think that is happening at a. I mean, the base is expanding. Higher, more
Right.
quality entrepreneurs are emerging. More
Right.
fundable, Series B fundable startups are emerging. See, we
Right.
went through a dearth, and this is what I worry a little bit more
Right.
about, right? That when there are cycles where there's a lot of capital going in,
Right.
very often they're followed with cycles where you have no capital and there's a pullback
Right.
by certain people because or certain large investors And this has happened back in 2015, 16. I remember people were talking about this big valley of death at the Series B level
Mm-hmm.
because there just wasn't funding that was coming in.
Right.
And I do think there were enough entrepreneurs who had enough quality at Series B stages then, who
Right.
had they got funding to take them through that and through the days of. So it's, I mean, just because you reach Series B doesn't mean the risk profile has changed significantly.
Right.
That's what we've
Right.
learned. There's still a
Right.
lot of risk by the
Right.
time you really become, let's say you become a unicorn and so on and so forth.
Right.
And I'm just thinking about what was happening with Flipkart in 2015, 16. People were,
Right.
writing it off in a sense.
Right.
But if you really look at it, I think there are enough entrepreneurs who would have done well had they got that capital at that point in time.
Right.
And I'm happy that the availability of capital is there now to fund these good guys
Right.
if they reach a Series B, C stage now. But I just also worry a little bit that it shouldn't be a temporary cycle
Right.
and that it should really be a situation where people are not pulling out and it continues to remain a secular rise of capital over a period of
And
time.
more continuous capital as well. That's a very interesting point that you've highlighted, Ashwin. Ashwin, I want to actually, through the course, I mean, I wanted to actually discuss this point, right? What are the kind of founders that you look for, right? And the way I look at it, there are two kind of founders, right? One is who's trying to solve with money, and then of course there is this variety of founders, who are not necessarily solving from money, but essentially are, very involved in the process. They're very, very profit centric, right? At least at a unit economics level, right? Which is the founder that would fit the larger thesis of Ashwin as an investor and Bharat Innovation Fund, right? What is the founder that excites you, right? And what has changed, say, after the 2020 environment, right? What are some of those characteristics that you would look at when you are looking to sort of make an investment? Because I think the founder is a common constant, right? I think that's the only constant that you can really bank on. So what are some of those key characteristics that you would look at?
And that would be in a founder, right? I do think, I mean, let me
Yeah.
address the first part,
Or a
right?
founding team.
Yeah, the founding team, I think several things, but let me address the first part between
Sure.
profit and between, let's say growth and using money.
Solving with money, yeah.
Yeah, I think unit economics is the one that comes to mind
Right.
over profits, at least a sense of where it is going.
Right.
Even if you're spending big, having some sense of what you're spending on, spending at the right time
Right.
rather than indiscriminately. I think these are all qualities that come to mind. Yes, you do need to spend at some point in time, and
Right.
the question is how well you're doing it. And so
Right.
there's various shades of gray there.
Right.
And somebody who's understood the market well will know when to put the fuel behind, let's say, an idea product, and when
Right.
to hold back and say, okay, let me fix a few things here before
Right.
I put the fuel into it.
Right.
Coming to the founder, I think there are several qualities that we look at.
Right.
But yes, you're right. The founding team is extremely important. I mean, I can say the usual things, right? We want to have an entrepreneur who's very different, a very cohesive founding team,
Right.
complementary team, and then I'd just be repeating things that a ton of people talk
Right.
about already. So if I were to stay away from that and say, okay, all that is a given,
Right.
and once we've got all of that,
Right.
what are we looking for? I think when we have meetings with entrepreneurs, there are
Mhm.
two or three signals that we're looking for.
Right.
One is when an entrepreneur is talking about a particular space, how
Right.
well has he understood the dynamics of that space,
Right.
the industry that he's going to address,
Right.
the gaps over there, but more importantly, the dynamics.
Right.
Right? Business is always about an interaction with many, many sets of
Stakeholders.
actors. And if you
Absolutely.
have understood all of those dynamics, you will know not just what product to build to
Right.
fit a gap, but how do you actually get it into a customer and make him pay for it,
Right.
right? And for that, a very strong sense of understanding dynamics is something we look for. And when I come out of a meeting with an entrepreneur feeling a lot more educated than with, let's say, another entrepreneur, I mean, every one of those meetings is educational,
Right.
but where you really got a good education, then you say, hey, this guy knows what he's talking about. So that's one characteristic that we look for. The other
Mhm.
signal we look for is, of course, when there is an interaction between entrepreneurs
Right.
or founding teams in a conversation with us,
Right.
very often that gives us a signal. And we actually pulled out of an investment where despite multiple
Wow.
meetings,
Right.
we could not meet both the entrepreneurs in the same room.
Right.
Despite having traveled to other cities and so on and so
Right.
forth. So
Right.
you can't what are the dynamics between the two founders is something
Right.
we couldn't gauge. And that itself was a red flag to us.
Right.
So very important to see some of those dynamics play out. The
Right.
third part is, this is the big challenge
Hmm.
as an entrepreneur.
Right.
You've got to learn when to listen and when not to listen, right?
Right.
It's like, I think, Rakesh Junjunwala saying, as the big bull,
Right.
that listen, if I'd listened to economists, I would have never made money in this topic, right? So
Right.
an entrepreneur has to sort of also have that very strong view and ability to form a view and
Right.
understand the direction, because others can't do it for him. But at the same time, listening to the ecosystem, potential customers,
Right.
your investors, and so on and so forth. Just people who've
Right.
been there, done it, other entrepreneurs, so that you're able to build that view, which is your own, then
Right.
is extremely important.
Right.
And which tidbits of information to take, which to discard, it's such a skill, right? And the good entrepreneurs I've seen do that piece well. And
Right.
so we try to, gauge in the limited amount of time that we have
Right.
as to A, can an entrepreneur hold his own?
Right.
If he's, sort of questioned and grilled, quote
Right.
unquote grilled. But at the same time,
Right.
would he be able to take pieces of information that you're giving and
Right.
synthesize it with what he's already thinking,
Right.
and then arrive at a, sort of a final decision or a path
Very
forward?
interesting. Right. Very interesting. Ashwin, we're towards the end of the conversation, right? I have two last questions, right? One, of course, I want you to talk a little about the anti-portfolio, right? And I'm sure, that, I mean, everybody has a list, right? For many, many reasons, right? And I think the ecosystem that you operate in, and given the nature and the dynamics of that ecosystem, I'm sure, it's been a difficult one, right? But what would be the anti-portfolio uh, look like?
So Ashu, my anti-portfolio is bigger than my portfolio, to be honest, right?
Right.
And way bigger than my portfolio.
Right.
So I don't even know where to start, right?
Right.
Because there are just so many startups. But
Sure.
let me name a couple,
Right.
maybe a little bit of recency bias.
Right.
And I'll tell you, to be honest, with folks like me, I
Right.
get more heartbroken when I'm unable to do a deal, which is really exciting me, than
Right.
when I do a deal and then it doesn't, that particular investment doesn't succeed. I'm
Right.
okay with that. That's the
Right.
risk that we investors bear.
Right.
But when you miss deals, it really sort of breaks my heart. A couple that come to mind, I think the more recent one is that I can think of, at least in terms of
Right.
its success, is a company called Smokescreen.
Right.
Been interacting a lot. It's in the security space. Very
Right.
interesting. Something called, what is it? It's a decoy type of deception technology, which
Right.
honeypots a hacker, and then traps the hacker, and is able to
Wow.
then identify vulnerabilities in the system, or if somebody is trying to attack a system
Right.
through some amount of deception and
Right.
decoy mechanisms. So
That's
it's a
very
very
interesting.
interesting startup. They recently got acquired by Zscaler,
Right.
one of the largest Nasdaq listed companies in the
Right.
security space. So these guys, when I was talking to the entrepreneur, I think I met them a few years back at
Right.
an event organized by NASCOM.
Right.
And so the entrepreneur said, listen, I don't want capital now.
Right.
But if at all I want to raise capital, you'll be the first guy I'll come to,
Wow.
right?
Right.
And so I said, okay, fantastic, do come to me. And I was really impressed with what they were doing. We
Right.
discussed it internally, and I said, listen, we've got to keep an eye out
Right.
on this guy. Really, really good entrepreneur. And then when he did come back to me eventually, is when I actually reached out to him
Right.
to get a view of his on another deal in the same space, or
Right.
another startup in the same space that we were
Right.
looking at. And I just wanted to get his insights on that startup. And we were pretty far into diligence there. And so I reached out to him and said, can you give me some information? I mean, not information, but feedback on this
Right.
particular thing. And he said,
Right.
hey, by the way, thinking of raising, would you want
Wow.
to come in?
Right.
And I said, wow, we're so far advanced with the other one. And
Right.
so we couldn't do it. But so that is one. The second is a company called Atomberg.
Right.
Very interesting. Couple of graduates from IIT Bombay, and went straight into the startup world once they
Right.
graduated. And at the surface of it, they seem to be a very plain vanilla company.
Right.
Their product is ceiling fans,
Right.
right? And how does that fit in with innovation and Bharat Innovation
Right.
Fund? You may ask.
Right.
When we started talking to these entrepreneurs, we realized that they were building a fairly new cutting edge ceiling fan, if you can call it that.
Right.
And the technology that is cutting edge is really in the motor technology. So they were
Right.
creating extremely, or they are creating extremely advanced motor technology,
Right.
which A improves power consumption
Right.
levels, which B reduces the cost, which C can be used in a ton of other applications
Right.
in home and outside the home,
Right.
uh, which go beyond the ceiling fan itself,
Right.
right? And for many reasons, we weren't able to go through with the investment,
Right.
but they are really doing extremely well now. They've really scaled up, I think, about 10 times on their revenue.
Wow.
Even when we were talking to them in the
Right.
3 or 4 months that we were talking to them, they
Right.
had doubled their monthly revenue rate. So we were, very keen. Didn't go through. Fantastic entrepreneurs. Still
Right.
in touch with them, and really wish them well. But continue to remain heartbroken that both these deals didn't go through.
Right. Interesting. Ashwin, my last question, right? I think you've been extremely focused on deep tech and mostly enterprise, right? And which is the non-glamorous side of things, right? It's not something that is talked about daily. It's not something that the consumer gets to interact with, right? It's only something which is improving organizations that deliver better results, right? Uh, how large is the temptation? And you could answer it in your own way, right? But how deep is the temptation, right, to go out and invest in consumer tech companies, right? Because that's where the results are so much more visible, right? And as an investor, everybody wants to open, right, the innings, right? Because when you do that, it's a very different excitement, right?
Yeah,
The expectation is very different, right?
yeah, yeah.
In your case, how deep is that temptation?
No, I love the way you put the question, right? Everybody wants to open the innings. And so I'll come to that part later. But I think you're absolutely right, right? We've picked a space which is a little bit less glamorous. Every
Right.
time I go to a party or some sort of get together, people say, "Hey, what do you do?" And I say, I'm a VC investor. And then, "Oh, really? Tell us about a deal that you've done that we know of." And my only answer can be, listen, I don't think you'd have heard of any of these guys.
Right.
And I'm talking about, people who have no attachment to the tech industry
Right.
whatsoever, right?
Right.
So it does get tempting. I think that's going to change,
Right.
right? I don't know if you heard of a company called Postman that
Right.
recently got a $2 billion valuation,
Right.
5, 6 years company, deep tech space. So that,
Right.
in a sense, I feel that was our first deep tech unicorn. There
Right.
are going to be many more.
Right.
And I'm very, very bullish on the deep tech space. I think
Right.
the time is going to come
Right.
as far as deep tech is concerned, and deep tech out of India becoming well recognized and
Right.
going global, and people understanding about that, right, is concerned. So it's like the equivalent of, let's say, a Saurav Ganguly, who may have been coming six down for a while,
Right.
but then he got his day in the sun and he was asked to open the innings and he made it count.
Interesting. Right.
And so we are waiting for the day when from six down we're going to be promoted to the open the padding. Until
Right.
then, we'll just do a little bit of net practice and get better at it and wait for
Interesting.
our time in the sun. We're
Right.
quite happy as investors
Right.
while people do know about us in the entrepreneurial world, which is what
Right.
matters, and in the
Right.
investment ecosystem, which is
Right.
also what matters. I think glamour can wait, and if it doesn't come, we're quite happy being in the shadows as well.
Interesting. Ashwin, this was a phenomenal conversation, right? I loved every bit of it. Usually it gets into a very serious discussion, right? When you talk about investments, when you talk about, the landscape, when you talk about the macros. And I think when you talk about, a situation which is as say complex and complicated as we are in now, right? But this was a conversation I thoroughly enjoyed. Thank you so much for taking the time out. It was a
No, it is
pleasure.
all you. I think the questions were fantastic, and the discussion. I think more than anything, I think there are a lot of points that you brought out in your questions, which perhaps stoked some answers at my end. So, pleasure chatting with you as always. Formally this time, not over coffee as it has been in the past,
Right.
but
Right.
real pleasure.
Thank you, Ashwin. Take care.